Hello and welcome to Islamic Finance Weekly. I am Rahma Say Muhammad. Still discussing on the theme non-interest finance and financial inclusion. Today we will be discussing on how non-interest finance can deepen Nigeria's financial inclusion agenda beyond 2025. And joining me virtually on the program today is none other than the General Manager of Enhancing Financial Innovation and Access, which is EFINA, Dr. Oluwatomi Oromosele. Thank you, ma'am. Thank you for joining us on the show today.
Thank you for having me.
Thank you. So, starting the conversation today, let's talk about those key challenges that Nigeria currently faces in achieving full financial inclusion and, how non-interest finance can address these gaps. I mean, with Nigeria aiming to reach a $1 trillion economy, and then there are those underlying challenges, how do you see non-interest finance helping bridge that gap?
Thank you. It's important. Nigeria has made significant strides in financial inclusion. We've seen the proportion of formerly served adults more than double from 23% in 2008 to 64% in 2023, right? So we've made significant progress. But like you said, challenges persist. And we've seen access to payments has expanded rapidly. However, access to credit, savings, pensions, and insurance, which are critical for social and economic impact, those services have stagnated, right? And some of these challenges stem from our weak infrastructure system, right? So we have rural and underserved communities that continue to face barriers where we have poor digital connectivity, we have lack of physical financial service points, right? In rural Nigeria, not just northern Nigeria, but rural and northern Nigeria, we see that we also see that there is the absence of robust, safe, and I would say reliable infrastructure. So, I mean, over the last, I would believe, 12 months, one of the critical challenges that you continue to hear is the issue of consumer protection and the risks that people face being exposed to fraud and things like that. So those challenges exist. And when you combine that to the fact that about 50% of unbanked adults cite irregular income as a reason for exclusion from banking services, then you then look at the rising cost of living, multidimensional poverty, and you can actually see how the macroeconomic pressures and poverty and income instability is contributing to driving financial exclusion. On top of that, we have demand side factors like low financial and digital literacy, really hampering on people's uptake and usage of financial services. And even when we look beyond, their uptake and usage, at the end of the day, no one really cares about being banked or not. They just want to be able to make payments when they want to make payments. They want to be able to have access to some kind of credit if needed. They want to be able to protect themselves against shocks. And regardless of who that comes from, people want to be able to use finance in a way that improves their livelihoods. But we see that about less than 20% of Nigerian adults are financially healthy. So the point I'm trying to make is we have significant challenge with regards to access and usage, but I even think that more so is the fact that finance today is not meeting the needs of Nigerians and ensuring they are financially healthy. And that's where I think that non-interest finance comes in to play a critical role. Why do I say that? Because when we look at trust in the financial system, we see that people who are using non-interest finance show a higher level of trust for their institutions, which means that there is some kind of needs. My needs are being met. You promise and you deliver on your promise. And so I have more confidence. I'm more likely to use. And I think that is something that the non-interest players can bring to the ecosystem, not just within their space, but also demonstrating how that can be done. I think it's driven by high values of consumer protection, of ethics, How do we begin to share that with the rest of the ecosystem so that people don't just see themselves as a tool to, meeting your bottom line, but I actually do see that you care for what I need for my children, for my health,
Right.
and all of that is carried along. Other things like risk sharing, which appeals to micro entrepreneurs and MSMEs who are seeking flexible financing. We all know that in the economy today, very few people are able to access credit or even raise significant capital for their
Right.
businesses. So risk-sharing models, asset-based financing models that can help small businesses and farmers to achieve or acquire the right equipment that they need without high interest loans. Recently I was speaking to some agents in rural Nigeria who we are trying to get to take up solar solutions, just trying to drive sustainability as well. And this is in the north. A majority of them said, I don't want interest, but tell me what you're giving me. Tell me you're going to meet my need and tell me what I need to pay. That works for me. So the idea is, yes, we don't want the term interest, but we do want you to meet our needs if you have solutions that meet our needs. And so we need non-interest to kind of handhold, I will use that word, handhold the rest of the ecosystem to say we have this population of people who have needs and are willing to engage. This is how to engage with them. And these are the solutions that we can bring, to serve these people.
Yeah. All right. Thank you so much for that elaborate and distinct, information. So talking about, all of these factors, all of these challenges, and then the answers to their needs, solutions to their needs. Let's talk about regulatory frameworks. How is EFINA supporting regulatory and policy initiatives to enhance adoption and expansion of non-interest finance services, especially here in Nigeria?
So EFINA plays a critical role. I think we've always been a market facilitator and a market enabler. One who is, we see systemic barriers and we work with regulators and with providers to say, how do we address these barriers and lower the barriers to ensure that there is an equal playing field for providers. And currently we're working with regulators like the CBN, NICOM, and also SEC to see how can we refine policies and support non-interest finance. We already have regulation that enables this, whether it's for takaful or it's framework for non-interest banking. But the idea is that how can we tweak these frameworks to encourage partnerships and collaboration and to also encourage the use of digital, right? I think in 2013, when the non-interest, 2012, when the non-interest framework was initially started, we had not gone fully digital as an ecosystem. And I think with the changes that we've seen, knowing today that people can leverage digital to, interact with solutions, we should also be thinking about how do we enable those frameworks to be that friendly. Also understanding today that we need agents, for example, to reach these areas. And we also know today we can bundle services, right? How do we ensure that we can frameworks can be supportive? We don't have fully an open banking framework being fully active, but at the same time, how can we ensure that there is a lot of collaboration, that the framework at least allows for that, for us to be able to bundle services to meet the needs of people? Again, understanding that people's needs are multidimensional. We don't just have maybe a finance need. Sometimes our educational needs or gaps stems from finance needs. Sometimes our health needs are because we have finance gaps. So our needs are also they're collective, right? So how do we ensure that regulation allows non-interest to be integrated in everyday lives of people, right? Beyond regulation, EFINA is doing a lot of research, market assessment. One of the things, I think the assumption which has been debunked right now, based on evidence, is before now, when we talked about non-interest finance, we all were thinking about people from the north or, but today we even see that not just northerners, not just Muslims, Christians today also appreciate this. So how do we get that information out there through research that shows the benefits to every Nigerian?
Well, thank you so much. I mean, I love the fact that you called it an assumption that people assume non-interest finance or Islamic finance is for the, Muslim or the Northerners. But I've said this countless times. People I have conversed with have said the amount of like the number of customers that they have from the non-Muslim world is way higher than those in the Muslim world. That's to tell you that it's open to everyone, and those embracing it are actually those in the non-Muslim, world are embracing it more than even the Muslims. Thank you so much for that. I mean, moving on, EFINA is about innovation, all about innovation, digital world, new world, and all of that. So beyond regulatory frameworks, what innovative models and partnerships can be adopted to ensure that long-term sustainability and impact of non-interest finance in Nigeria's financial inclusion drive? I mean, what are those?
I think this is a great question because post-COVID in the digital world, it's even more clear that there is, sustainability is almost impossible without partnerships and without collaboration, because you really can't do everything. You don't have all of the legwork. You don't have all of the resources. And, partnerships is what we need. And I think one of them will be fintech integration. How can non-interest finance providers partner with fintech startups to develop digital solutions or platforms that can offer micro non-interest loans or micro savings or micro investment products to rural and low-income populations, using technology and channels that are suitable for these segments, so that while, for example, the non-interest finance providers that we have today may have maybe a clientele of maybe 2-3 million, by partnering with a fintech provider who maybe has reached 10 million providers, you are able to leverage their customer base to access, non-interest finance. Because again, we need to understand that not everybody might want, even the high interest that the fintech might have to offer. So by offering them different, diverse solutions, I think it's also an opportunity to give people choice. That's another thing that we offer by these partnerships, right? The other thing is crowdfunding platforms. Yes, we've had this Sukuk bond and things like that, but we need to establish Islamic crowdfunding platforms for SMEs, right? Where investors can provide capital under the same values that we hold, the ethics that we hold, right? But these are funds that can actually help us finance startups and small businesses that we care about. Because I'm Christian, but I know that based on our faith, we are encouraged to give, right? There's a lot of social finance, there's a lot of social giving, social impact projects that we care about. And we also know that one of the things that we see growing is the fact that people want to live impactful lives. They want to be able to do things and know that they're touching lives. So I think we need these crowd platforms, or we need this kind of endowment funds where you give people the opportunity to contribute meaningfully to their ecosystem. And we see those needs. The idea is, do we have tools, and solutions that people can put their investments in to drive those outcomes? Then I also believe that, the government of today has some plans around social investment, humanitarian services. But beyond that, there are also developmental partners who have funds and they want to give that out. But whether it's for agriculture or MSMEs, but sometimes we also see that some people are not willing to take these solutions because they think there's interest, associated with that. Even if you say it's single digits, we still know what it is. So how can we partner with non-interest finance so that our typical way of not saying, this is not single digit, but we have a partnership with you. We come into an agreement. We support you with this. We see your business grow and we get some returns on it. That kind of partnership between government and non-interest players, I think, is important. Lastly, in today's world, We know that no non-interest finance provider will go build a bank, anywhere. We all are trying to reach rural areas through agent banking or financial service agent networks. I do believe that if we want to reach rural communities, there is no way else to do this than by partnering with rural agents, providers who have strong, reach, enabling cash in, cash out services. But beyond cash in, cash out, we can onboard, on those platforms, microinsurance, microcredit, things that we know will serve the needs of the people that we do care about. So I think these are areas that we can partner to advance non-interest finance.
Right. Thank you so much for that. I love most of the points you made in that, and I'm sure our audience are going to, be happy with all of this. Thank you. So, final on our conversation today, let's talk about what are EFINA's priorities for deepening financial inclusion in Nigeria. I mean, so far, EFINA has had 20 technical assistance grants with a total value of $3.7 million, if I'm correct, according to research. And then you've had 4,682,492 Nigerians who have been financially included through EFINA funded grant project, of which 2 million are women. I mean, we can see the fair share of, inclusivity in it. So what are EFINA's priorities beyond 2025?
Thank you for the opportunity to speak about EFINA's work. So we have 4 key strategic priorities over the next 5 years, and I will just touch on them, but speak more specifically to the kind of segments that we want to reach. So first is we want to enable regulation that will be inclusive and would allow for pro-poor solutions. We also want to support infrastructure because like we've spoken about, we can't reach people. We can't serve people if we can't reach them, right? So we want to support reliable infrastructure because the safety of the infrastructure also matters. Thirdly, we will also want to enable value-adding solutions.
Right.
Like I said at the beginning of this, we have over 70% of adults making payments, but we only have less than 10% using credit, or insurance or pension. Those are the things beyond payment that will add value, where I think the gap, between 64% formerly included adult Nigerians to 20% financially healthy adult Nigerians. The difference between that is that our solutions are not value adding. So in 2025 and over the next 3 years, we want to drive value adding solutions. And lastly, we want to strengthen the voice of the user. We just think that in Nigeria, largely, we're like a people who, whatever we are given, we just take and we go. We don't have a say. We want to strengthen the ability of people to have a voice and to be able to say, this is what we need. This is what, adds value to us, and demand that financial institutions deliver that to us. And so just 3 things I would say that we're focusing on is women. We do believe that women are critical to empowerment. And so we've also changed our vision from just focusing on financial inclusion, but also looking at economic empowerment. And women are critical to this. So we're now focusing on driving an ecosystem that supports women. We have a gender center of excellence that would help us, bring about gender mainstreaming, thinking about how well do we serve women? How do we design for them? How do we interact and engage with them? How do we meet their needs? So that's something that we're doing. We also have an initiative called the Inclusion for All Initiative. And this is the initiative through which we want to amplify the voice of the underserved. And then lastly, we're going to also leverage our research and our innovation to support credit and to support infrastructure, digital public infrastructure. We hope that in doing these 4 things, we will be able to advance not just financial inclusion, but also drive economic empowerment. And like you said, the pathway to a $1 trillion economy is one that is paved with inclusive economic growth. So inclusion of all Nigerians is how we get the $1 trillion economy.
Right. Thank you so much for that. Thank you so much, Oluwatomi. Thank you so much for your time. Thank you so much for your enlightenment and, your input.
Thank you very much for having me.
Major takeaways for me from this conversation today are, Islamic finance granting choice to people. I mean, you either have to pick between interest-free or interest inculcated financial services. And then there are a plethora of options that non-interest finance is serving to the people, from crowdfunding to social impact finance to social endowment funds to enabling value-added solutions. And another thing EFINA is doing is strengthening the voice of people to demand for better financial services. You've heard my takeaways. What are your own takeaways from today's episode? And with that, I would say, don't forget to keep it today to us next week on the program. Follow us on all of our social media platforms displayed on the screen. Thank you for watching. And as always, I am Rahma Say Muhammad.